Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio, and if you're on this channel, most likely you're a realtor, you're an investor, or you're a consumer looking to possibly buy or refinance a house. So what we talk about here on the channel every day, or every morning, are where mortgage rates open the day, what my feelings are that they're going to do for the next day, the next week, the next month, and the next few months. And then what we really discuss is the why I feel they're going to take the direction that they're taking. So check it out. I think you'll find this very informative. Okay, so the first thing we want to discuss is where are mortgage rates, okay? And then the next part we're going to say is what's going on in the bond market, and I'm going to explain that why. The first area we look at is where did mortgage rates open for the day? Okay, so let's go across this. I'm going to explain it to you real quick. We got this cell right in here. This is where we are on the 30-year mortgage rates. Okay, this is a 30-year conventional rate. It's not FHA, it's not USDA, it's not VA, it's not a jumbo. It's a conventional loan, okay? A normal standard loan you think of when you're getting a mortgage. All right. So we look through this cell here, and the rates today are, and these are rates posted by Mortgage News Daily. They do a survey of mortgage lenders all over the country. These are not my rates, okay? So we see here, the 30-year fixed rate is coming in right now at 4.04%. That's this cell right here. You go over to it and it says minus 0.14. That means it is down 0.14 from the day before. Okay, so that's how you read that. Down below here, it'll tell you if there's any cost to get this rate. So in this case, the survey said that there was 0.4 in points that you would have to pay to get that rate. So let me explain how that works. So what you do when you're trying to figure out how much points come to, you take your loan amount, not the house's value, but the loan amount, and multiply it, in this case, by 0.4, and then hit the percent sign. Okay, that'll give you the cost. So now let's go on to the 15-year. The 15-year is coming in at 3.37. It is down 7 basis points. And that also comes with a cost of 0.4%. 30-year FHA, we don't have a VA rate that's posted on here. So basically FHA and VA are pretty much the same. So we're coming in with FHA and VA at 3.63, down an eighth, 0.12. An eighth is 0.125. So I'm assuming it's an eighth. And that comes with no points. And you can see across the bottom here, we are off our 52-week highs all the way across the board. Let's continue off to the 30-year jumbo. It's coming in at 3.6. Down 5 basis points, and then we go to the ARMs. The 5-year ARM is 3.69, down 3 basis points. That one comes with 0.45 in points. Okay, then we go down here. What's the trend for the day? Well, the trend is basically people are pouring into the bond market, and mortgage-backed securities are a bond, and I'll explain that here in the next screen. But there's a lot of people going into the mortgage-backed securities and / the bond market. Next, we're going to look at the biggest component of what makes up your interest rate on your mortgage, and it is the mortgage-backed security bond. Okay, it's right here, MBSs. That's what they call them. So in this case, this is what I monitor on a daily basis. So let's refresh this because I've been talking for a minute or two, and you're going to see this move periodically through maybe even when I'm talking. So what happens here is as this bond price, this is what's happening. We're going to focus right in this area here. As the price of the bond goes up, it drives down yields. Okay, so let me explain this for the newbies out there. So let's say, for example, I'm going to explain bonds 101. So if you watch my video every day, you can fast forward to the next section. But for those newbies out there, I want to explain this. So let me explain how if the price goes up, the rates go down. All right. So let's say we have a bond that matures next year for $100. All right. So today I give you $100. And next year when my bond matures, you give me my $100 back. So I give you 100, you give me back 100. So what is my yield, or what's my return on that? 0. Okay, so remember, when I paid 100 for my $100 bond, a high price, my yield was 0. So now let's drive down that price. We're going to say we'll pay you $50 for that bond. So I give you $50 today. Next year, you give me $100 back. What's my rate of return? What's my yield? 100%. So I paid 100, it was 0. I paid 50, a lower price, it's 100. So you see, as the price goes down, the yields go up and vice versa. So that's what we're going to talk about right here. So what we're seeing here right now is the price of the bond is up 0.31. So what that means is the rates are coming down. All right, that's what that means right there. Okay, so I wanted to be clear with that. Down through here, you're going to see the trend. We have a positive trend, meaning there are more and more and more people buying this bond, and you can see it's moved as we're watching this. All right, so they're pushing up the price and the yields are coming down. All right, here's the chart that I follow. It is live. You might be able to see this, you might not be, but this is basically tick by tick by tick. So I know basically almost every trade that's going on or taking place. So I want to keep a clear eye on what's going on in the markets. Why? The why is all this taking effect? Well, the conflict in Ukraine is pulling people out of stocks, as I said. So you can see this is down. The NASDAQ is up for some reason. Not sure, somebody probably came up with earnings or something happened there, but we see the Dow Jones down over 300 points. We see the S&P down 23 points. Okay, what's happening? Well, people are moving from this into bonds. Let's go to the report I post every morning. So if you want to see what's going on every morning, stay up to tune on all the events taking place, you can check out my newsletter. It's posted all over my social media. Go to my website and you can find that at the bottom left. It'll give you directions on all my social media. But you go in here and massive month-end buying collide with safe haven demand. I call it fleet of safety. That's basically safe haven demand. There were already a ton of safe haven demand in the bond market to start the week. Okay, people were even pushing in more and more and more. And again, what's going to happen with that? Well, as the prices go up because of the demand, rates are going to continue to come down. Now, what I want to emphasize here is it's probably pretty short-termed. Okay, what I mean by that is, why are people doing this? You always have to ask the why or know the why. People are doing this because of the Ukraine-Russia situation and the worldwide catastrophic events that this could have on everything. One thing people don't realize too is with this, we're going to see energy prices moving up, thus pushing up inflation. So what I'm looking at this is a short-term, a very short-term opportunity for those out there. I'm not fear-mongering. I'm going to give you a prediction. Rates are going to go down and they're going to go stay at these levels, maybe a little bit more of an ease. As soon as we see the conflict in Ukraine end, and it could be days, it could be weeks, it could be months, we don't know. When that ends, you're going to see a flee back into stocks and people getting out of the bond market exponentially. Why? Inflation. Okay, and that's one of the things we talk about here a lot on the channel. So I won't talk about it today, but that is the biggest concern. So this is basically giving you a great opportunity to jump in the market. If you haven't refinanced, maybe look into that. We do have long-term rate locks. So if you're looking to buy a house, we can lock you in up to 90 days, even if you haven't found a house. Now, if you found a house and you're building or it's not going to be ready for you for 2, 3, 4, 5 months, we can lock you in up to from 180 to 270 days out. So check out that programs. How do you find out more about me and my team? Great question. What I need you to do is go to the rate update. Here it is. And you're going to go, there's basically 3 ways to apply or reach out to us. The first is give us a call at 844-775-5626, or you can book a meeting. It'll open up our calendar, give you the days and times we have available, or you can click the apply now button and you're on your way. What you expect on there is it'll take about 5-10 minutes to complete. Based on the answers to the questions that you give, it's going to say, hey, we need these documents from you. You can drag and drop those right into this system. It's a secure system. We'll get alerted that your application is in. We'll review it and immediately get a hold of you to make sure we know why you're looking to do what you're doing. So God bless, guys. Thanks for watching my morning report. I do post a video in the evenings going over programs or some other updates. So check those out as well. And I hope you find value in my channel. If you do, please give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. I'll see you this afternoon. Bye-bye.